This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Money moves. Tax reform speeds ahead in Congress, creating a lot of unknowns as Americans make their year-end tax plans. What's next? The Dow and the S&P 500 close at records, but could the Fed be the biggest risk to the rally next year? Rethinking medicine, an experimental new way to treat blood disorders, and new hope for those who have exhausted all other options. Those stories and more tonight on Nightly Business Report for Monday, December 11th. Good evening, everyone, and welcome. I'm Sue Herrera. My partner, Tyler Matheson, is off tonight. New highs for the Dow and the S&P 500. We'll have more on that in just a moment. But we begin tonight with the push for tax reform. The Treasury Department today said the new tax bill will generate $1.8 trillion in new revenue over 10 years, thanks to increased economic growth. That's more than projections from the nonpartisan Joint Committee on Taxation. As the numbers get crunched, lawmakers are trying to get the final bill across that finish line by resolving differences between the House and Senate versions. Those differences include the number of tax brackets, the limit on the mortgage interest deduction, and medical expense deductions, among other things. The negotiations come just weeks before the end of the year, a key time for tax planning, making it also a very confusing time for many Americans. But there are some potentially money-saving strategies you can employ. Sharon Epperson joins us now with that tonight. It's always good to see you, Sharon.
It's good to be here.
So let's start, first of all, with year-end tax planning. It's always important, but more so this year, right?
More so this year. I mean, the tax saving strategies that we're going to talk about are some of the best gifts that you can give yourself, but especially now because some of the key things that you've been doing may change significantly. And one of them is if you itemize your deductions, the standard deduction is likely in both versions of the bill to increase to nearly double to $12,000 for single payers or single filers, I should say, and $24,000 for married couples filing jointly. That's a big change. And so if you itemize some of the deductions that you mentioned, that's going to be a change you want to take a look at now.
I have a cheat sheet, so I know that she's got some really important tips here on what you can do. So what should, as taxpayers get to the end of the year, what should they be looking at? What can they do to be proactive against what's going to be, for some cases anyway, an expensive change in their life?
Yeah, one of the key things that people itemize when they do itemize deductions is they take a look at their property taxes and their state and local income taxes. There could be big changes there. So one of the things you may want to do is pay your property taxes now for next year, at least pay some of them. And you may also want to consider paying some of those state and local income taxes as well if you can pay some of that. Get a head start on prepaying that. That could, if there are changes, if they do come down the pike, you've already paid some of that. And
I see you say boost charitable deductions, because that bracket is changing as well.
Well, again, because you have to itemize in order to get that charitable contribution deducted, and so you want to make sure that you boost those now. Do more of those. Another thing that people often forget about are miscellaneous deductions, job hunting expenses, unreimbursed work expenses. Those could go away. So if you can take some more of those before December 31st, do that, document it, and use it to write it off on your 2017 taxes.
And obviously they're going to try and reconcile those two bills, but regardless of that, you know, you've been with us in the past where you've had some really tried and true things that you can do, regardless of the tax changes, to really, you know, benefit yourself going into the year. Tell us about
Exactly. Well, look at your investment portfolio. Look at your taxable accounts. There you can do something called tax loss harvesting, which we've talked about, where you sell your loser investments and you replace them for, you know, after a short time with another investment, so you maintain your asset allocation. But you can do that up to $3,000, and that's a really great way to kind of offset your capital gains by taking some of these losses. What you want to do with your tax deferred accounts, and this is the greatest gift you could give yourself, max out your 401k. So many people do not do that, but you can do $18,000, up to $18,000, or $24,000 if you're 50 or older. And if you are self-employed, this is one thing I want to tell people who are self-employed, freelancers. Look at the solo 401k, $54,000 you can put into a solo 401k as long as you set it up before December 31st. You don't even have to put all of that money in by December 31st. You just have to set it up. You have until the tax filing deadline in April to put in the full contribution.
That is a great tip.
It is.
I'm sure a lot of people don't know that.
Yes.
Sharon, as always, you're the best. Thanks so much.
Thanks so much.
Sharon Epperson. A new survey from the National Association of Manufacturers says that optimism is at a 20-year high and that the recent pickup in confidence has to do with the legislative agenda in Washington.
It is the belief that government right now is focused on reducing the cost of doing business in the United States so that we can invest more, we can hire more, and we can provide better pay and benefits for our workers. That's good news for manufacturers, and they are very excited about the possibilities ahead. Tax reform is right front and center of that optimism.
The manufacturing industry is also warning that failure to pass tax reform could jeopardize economic growth. Energy investors and executives in that industry are looking closely at the tax bill to see if there will be winners and losers within the sector. So Jackie DeAngelis has that story for us.
The tax bill isn't finished yet, but it looks like it will be mostly good news for the energy industry. First off, the drillers are going to see support. The bill keeps drilling cost deductions for corporations. That helps them recover investments. So President Trump's support for big oil and gas will continue to be a theme next year. Nuclear energy will see benefits too. The $6 billion nuclear production tax credit would be extended, helping companies that are already building nuclear facilities. And the electric car provision, industry insiders think when all is said and done, it will stay. It's been a vital part of getting those businesses off the ground and will continue to draw investors and consumers. The impact on clean energy, however, is a little uncertain. The House version of the bill would partially or completely roll back credits for wind and solar projects. The Senate version doesn't do that, but it does add a separate new tax that would discourage multinationals from moving profits and jobs offshore. Because of the way that many energy companies are set up, it's believed that could cancel out the benefit of the renewable credits.
It certainly hurts the renewable sector versus natural gas. I think we had the House bill, which effectively cut back the wind production tax credit, even though the phase down was already agreed to. But then we have the Senate bill, which preserves the tax credits, but actually doesn't allow tax equity to receive the same benefits, and it's not as attractive for tax equity. So in both cases, we have wind and solar being hurt.
It's still too early to tell exactly how the finished bill will look and if it will pass. But tax reform won't be the only thing that will influence the energy sector in 2018. Volatility in oil prices already has the S&P energy sector down more than 7% this year, underperforming the broader market. For Nightly Business Report, I'm Jackie DeAngelis.
A rise in energy shares helped to lift the market to start the week. Washington, the talk of tax reform, and a Fed policy meeting later this week were also on investors' radar. The Dow Jones Industrial Average added 56 points to 24,386. The Nasdaq was up 35, and the S&P 500 rose 8. So let's turn now to Michael Farr to talk more about what potential tax reform and rising rates might mean for the stock market. He is the president of the money management firm Farr, Miller & Washington. Good to see you, Michael. Welcome back.
Thank you, Sue. Very good to be here with you.
All right, we're starting a new week. It looks like tax reform is getting closer, but we also have the Fed meeting this week. What are your expectations?
Well, I think that we will certainly see this quarter of a point hike out of the Fed this week. They've been broadcasting it. I think that they're going to be very consistent with that. You know, I think one thing, Sue, that people seem to be missing in the broader view of things is that the Fed really has reversed course. I mean, nobody's really seems to be too bothered by it because everybody is very optimistic. You know, so the Fed is on a tightening course. I think it's a big deal.
What about the market itself? You say this is a week or a month where we're starting to see growth move to value.
We've seen that right at the beginning, past couple of weeks. We've seen the FANG stocks give back. We've seen the Russell 1000 and the growth stocks and the NASDAQ kind of come lower, and the Dow surge much higher as a lot of the consumer staple stocks and more defensive stocks sort of started to advance. Particularly the banking stocks did very well, too. So there seemed to be a risk-off kind of a trade. The past couple of days, risk has been back on. It certainly was today. But I think that probably this trend, as things get a little dicier here, a little more uncertain as we see whether the government gets past its second shutdown date here towards the end of the month, I think you could see that trade continue to be established as people look for more solid balance sheets rather than just the momentum.
And you mentioned the Fed. How much of this rotation is due to the expectation of higher interest rates?
That is a great question, and we're going to have to see if the Fed really delivers on it. But there seems to be, I get worried when I see the spread between the 2-year and the 10-year Treasury now at 56 basis points. This yield curve is very flat, and a flat yield curve, or even when short rates go higher than long rates, that always is connected with recessions. So I'm nervous that the Fed might repeat what it did in the 1930s, go a little bit too strong-handed and put us back in recession. I worry a lot about these things, particularly when you report in the previous segment that optimism is at an all-time high, which tells me, investors aren't worried enough for me, Sue.
Well, you do the worrying for us, Michael, and then you can come back and tell us how you're feeling. We'll talk to you soon.
I'd love to be wrong.
I know, right? Michael, thank you as always.
Thank you, Sue.
Michael Farr with Farr, Miller and Washington. Well, it may be a new era for investors who can now easily speculate on whether Bitcoin's price will go up or down. Bitcoin futures contracts began trading on the CBOE, marking the first traditional trading platform serving the currency. Bob Pisani has more.
After much anticipation, Bitcoin futures finally began trading, and not surprisingly, the price went up. Bitcoin futures on the CBOE exchange were trading north of $18,000, up about 20%. Now, volume was on the light side. Only about 4,000 contracts had traded by the end of the first full day of trading. That's a value of maybe $60, $70 million. Pretty small potatoes, but it was orderly, and that will certainly increase. So what's next? More participation, more volume in the futures contract will go a long way toward making Bitcoin a little more respectable. Volumes are light because many brokers either don't allow trading of Bitcoin futures or greatly restrict trading. That's because a lot of brokers and investors want to see how this thing trades for a while before jumping in. But if trading remains relatively orderly, I'm sure more will soon. Now, that's good news. More participation will likely tamp down some of this volatility and will also introduce an element we haven't seen yet: short sellers. There's a lot of people who think Bitcoin is either an outright fraud or wildly overvalued, but it's been hard for them to bet against it. But these Bitcoin futures are priced and settled in dollars, so it's relatively easy to short. You don't really need Bitcoin, you just need cash. With prices rising fast, shorts will be cautious, but I anticipate they will appear in the near future. Also helping, the CME will also begin trading futures next week, NASDAQ early next year. The bottom line, it's still early yet, and while Bitcoin itself is still unregulated, the appearance of a futures market may go a long way toward at least making this cryptocurrency a little more transparent. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
Still ahead, new breakthroughs for blood diseases and new hope for those who need treatment. A number of biotech stocks made big moves today on new breakthroughs in blood disorders and blood cancers. Executives and researchers are presenting their findings at a key conference in Atlanta, and Meg Terrell is there talking to them.
The newest treatments for certain cancers and blood diseases change the way we think about medicine. Instead of being taken every day, week, or month, many of these therapies are designed to be administered just once. That new research was on display today and over the weekend at the American Society of Hematology Conference in Atlanta. It draws attendees from the worlds of both medicine and Wall Street and sent some biotech stocks flying. One was Bluebird Bio, which presented results on its experimental treatments for blood diseases and the cancer multiple myeloma. That's a one-time treatment that uses a patient's own immune cells to fight cancer. And the results, though early, offer hope to those that have exhausted all other options.
So it's really exciting in the sense that in myeloma, we're talking about something that really hasn't been seen before. Transformative ability to help patients that are really considering hospice and how to get their affairs in order. And then they get this one-time treatment here that is really fundamentally changing the potential of their lives.
Bluebird and its partner Celgene are now starting a larger clinical trial that they hope will support regulatory approval of the therapy. The conference also brought updates in the treatment of hemophilia, where companies are now testing gene therapies that aim to fix the underlying cause of the disease in just one treatment. Biotech company BioMarin soared on its update at the conference, while Spark Therapeutics sank. Its update disappointed investors, though the results were in just 4 patients.
keep in mind, these are patients that today have to take infusions on a regular basis chronically for the rest of their life. And I think gene therapy has tremendous potential to potentially give a patient a single dose and not only eliminate those excessive bleeds that they suffer from, but also eliminate the need for those chronic infusions.
Industry leaders also addressed political issues like drug pricing, a key question for these treatments that are administered just one time. They may carry higher price tags, but offer the potential to avoid longer-term treatment and costs. Also on business leaders' minds, tax reform. Many said it would provide a boost to their business.
We're happy to pay taxes in the United States, but we're paying a very high rate relative to other companies. So seeing the tax rate come down to 20 or 22% is that's meaningful for us because we can then put even more money into R&D.
Hope it gets done. I think it does get done. For Celgene, it will actually put us in a position to use a lot of our offshore cash that right now, like a lot of multinational companies, is a little bit parked overseas and we don't have the flexibility we otherwise might. So it's a good thing for America and it's great for Celgene.
Against an uncertain political backdrop, 2018 will bring more updates on these new approaches to how we think about treating disease. For Nightly Business Report, I'm Meg Terrell in Atlanta.
Two major hospital systems are reportedly in merger talks. According to the Wall Street Journal, Ascension and Providence St. Joseph Health are discussing the possibility of combining. Together, they would create the largest U.S. owner of hospitals, with 191 hospitals in 27 states and more than $44 billion in annual revenue. This report follows CVS's agreement to buy Aetna and United Health recently adding to its group of urgent care clinics and outpatient surgery centers. Is it likely that we'll see more consolidation in the healthcare industry? Brian Tankillet joins us now to discuss that. He is the healthcare services analyst at Jefferies. Brian, welcome. It's nice to have you here.
Hi, good evening, Sue. Thank you. Why
are we seeing this type of consolidation and these types of deals being inked right now?
Yeah, I think what's happening is that the healthcare system in the U.S. is evolving. We've seen some mergers, for example, in the nonprofit hospital space prior to today's speculation on the Ascension deal. And I think players are getting bigger as the landscape changes and, frankly, as we start seeing a slowing down of utilization trends for healthcare services.
You also make the point that a number of these hospitals are highly levered. They have a lot of debt.
That's right. So if you look in the public company space, you've got Community Healthcare, you've got Tenet Health. These are fairly levered companies. And so what we've seen is they've been selling hospitals, and we've seen companies that are also public, such as HCA and Universal Health, look for deals and take advantage of these emerging opportunities. So yeah, these companies have to pay down debt, and that they're doing that by selling some hospitals.
But is it strategic? I mean, I would assume that they would take a look at different markets and make a strategic deal rather than perhaps go outside of their established markets.
Yeah, that's a really interesting point, Sue. I still believe that healthcare is a local business. Hospitals try to gain leverage and market power by being deep and wide in specific cities. And so as we look at HCA, for example, they're big in cities like Nashville, Denver, Houston. That's how you gain leverage with insurance companies. So a lot of these publicly traded hospitals, the way they look at strategy is they're trying to broaden their scope and of services in specific cities. So that's how deals are getting done nowadays.
Do you anticipate any regulatory or government scrutiny of these deals as you get major players? I mean, we just mentioned this is going to be one of the largest owners of hospitals in the country.
No, it's a very good question. So in the past, we've seen the FTC get really strict when it comes to local hospital mergers. So perfect example, in Louisville, Kentucky, a few years back, we saw them block a deal where 3 hospitals were trying to merge. And I think that, going back to my point earlier, deals are going to get scrutinized on a local basis. So, obviously they don't want one hospital having 30 or 40 or 50% share of beds, right? So I think that these deals will get scrutiny. Now, in the Ascension St. Joseph deal, if this happens, this is a national deal. I don't think that there's much geographic overlap between Ascension and St. Joe's. So I think this is a deal that probably will get approved by the FTC.
All right, Brian, so interesting to talk with you. Thanks for joining us tonight.
Thanks, Sue.
Brian Tankillet with Jefferies. Boeing launches an $18 billion share buyback, and that's where we begin tonight's market focus. After the bell, the aerospace giant said it would launch a new $18 billion program, which will replace its existing one. The company also raised its quarterly dividend by 20% to $1.71 a share. Shares were initially higher in after-hours trading, but finished the regular day down almost 1% to $283.16. The billionaire investor Carl Icahn is nominating 4 directors to Xerox's board. A regulatory filing revealed a current Icahn-appointed director has resigned, a move that now allows Icahn to submit new nominations. Icahn said major changes need to be made at that company in order for it to stay competitive. Xerox said it would consider the recommendations. Shares closed unchanged at $29.59. Morgan Stanley's investment management arm reported an 11% stake in Overstock.com. Shares of Overstock have soared this year on its investment in businesses focused on Bitcoin's blockchain technology. The stock soared again, up 22% to $55 even. And Comcast is dropping its bid for 21st Century Fox's entertainment assets. Disney is still said to be negotiating an offer with Fox. Comcast, the parent company of CNBC, which produces this program, saw its shares initially rise in after hours. They also ended the regular day up 1% to $38.44. Meanwhile, shares of 21st Century Fox were little changed in after hours and ended the regular day up 1% to $33.66. The Southern California wildfires are relentless, causing billions of dollars in damages. Firefighters are struggling to contain them, and new evacuations are being ordered. Jane Wells reports tonight from Carpinteria.
Just when you thought it was safe to breathe again, the Santa Anas kicked up ferociously on Sunday, injecting new life into what is now the 5th largest fire in modern California history. Over 230 acres across Ventura and Santa Barbara counties have burned in what's called the Thomas Fire. That's more than 350 square miles, larger than all of New York City. One death has been attributed to the fire, and it's the first time in recent memory that a wildfire is still destroying homes and forcing new evacuations 1 week later.
¿Qué pasó ayer? Pues pura desastre que era demasiado humo.
Mario Cardona was forced to leave his home in the beach town of Carpinteria. The fire has so far destroyed around 800 structures, and 18,000 homes remain threatened.
We started to kind of pack the china a little bit of some of our, our Waterford and favorite coffee mugs. So it's interesting to see the different layers of frustration you go through, or panic, that type of thing.
The fire moved into the wealthy enclave of Montecito, home to multi-million-dollar estates. Celebrity residents like Oprah Winfrey, Ellen DeGeneres, and Rob Lowe tweeted out concerns or updates. 6,400 personnel from 12 states have come out to fight this fire. Many of them have staged here at Carpinteria High School, underneath the hills where the flames have been slowly making their way down. Also, there are 27 helicopters up today. On Sunday, there were 29 helicopters. Each helicopter is only allowed to fly 7 hours. All 29 flew 7 hours. Kelsey Bleeker watched the fire trucks line up in front of her house this morning.
It's been pretty scary, raining ash, and, the flame is threatening all night.
There has been no significant rain here for 250 days, but at some point the rain will come, the winds will end, the rebuilding will begin, and perhaps investigators will learn the cause of one of the biggest fires California has ever seen. For Nightly Business Report, Jane Wells, Carpinteria, California.
Coming up, ratings may be in decline, but the value of the sporting industry continues to score a touchdown. Verizon is paying billions of dollars to stream professional football games on mobile devices. The largest U.S. wireless carrier gains premium content, but it's also giving something up, making this deal look a lot different from the last one. Julia Borston has the story.
The value of sports continues to grow despite ratings declines. Verizon is doubling down on football, paying over $2 billion to the NFL over the next 5 years. That's about double what it paid in its last deal. This deal expands streaming from phones to any mobile device. But perhaps most notably, now subscribers to any mobile carrier, not just Verizon, can access games on Verizon's platforms, including Yahoo Sports and AOL. Verizon giving up the exclusive mobile access it had in its last deal to chase mobile ad dollars.
We've been moving very heavily into digital through our Oath properties, Yahoo and AOL. And to go to Yahoo Sports now via your mobile device and to be able to watch any game, preseason, regular season, playoff, Super Bowl, is something nobody else offers.
And for the NFL, which has been struggling with declining television ratings for the second straight season, this deal with Verizon helps the league reach a broader audience.
We want to make sure that whatever we do is complementary with the network partners. We think this is reaching consumers that aren't actually watching on television. They're looking to watch on other devices. And we want to make sure that we're there. That's part of the changing television landscape and the media landscape, that we need to be in those places.
The NFL's growing value to Verizon is part of a larger trend as traditional media platforms and internet giants, including Amazon and Facebook, look to secure rare content that fans want to watch in real time. A new PwC report projects the North American sports industry will grow over 3% annually to nearly $79 billion by 2021. Media rights are the fastest growing part of the business by far, far surpassing ticket sales and merchandise. And a number of sports deals are coming up for negotiation. 25 regional sports deals are expiring the next 5 years. And in 2021, ESPN's contract with the NFL expires. For Nightly Business Report, I'm Julia Borston in Los Angeles.
And that is Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us. Have a great evening. We'll see you tomorrow.